As you may have noticed when your policy has renewed or if you're getting a new insurance policy, the rates have skyrocketed. Actually, the top 10 insurance companies have had double-digit increases. I believe the average is like 34% across the last 3 years. So let's dive in and teach you how to save money on your car insurance and some discounts that you might be missing, help you get that extra edge, which could save you hundreds of dollars. Now, I know everyone under the sun, every article, I'm reading a Fox Money News article, I've got a ton pulled up, and they all want you to do quotes. That's their number one thing that they always say to shop. And they're not wrong in this context because shopping can get you a better deal. Reason being is the way that the insurance companies today is some are mispriced. And they're mispriced because they are feeling the hurt, but they're not legally changed their product pricing. So yeah, you could find a fit. I'm more of the type that just wants to find the company I don't have to keep changing back and forth. But if times are tough, you may have to go with the better price for now. And then when their prices raise, maybe you shift over to the better company later so that you get the best of both worlds. So the number one is to shop around and to look at different options, because the way insurance companies look at you is a profile. And all the things that we're going to discuss build that profile. Here's the risk. Here's the level they want the product price to be. Here's you. And you go up, you go down, you go up, up, down. You're good, you're bad. You have good driving record. You have no tickets. They like you more. The risk is, well, the opposite. The risk is lower. You're a good driver, no accident. Oh, you got a 16-year-old, boom, you're up there. Okay, wait, that they've taken a driving course, great. They have good grades, great. All of these things play a factor that create that profile. Where's your credit? Where's your location that you live in, the territory? All of those things are going to make up that premium. Now, the reason we're talking about that is because that profile is fitting into different companies. Imagine that toy where you got the square peg and you're trying to fit it in that round circle. It doesn't necessarily fit, although I did see on TikTok everything fits in the triangle. Is that or the octagon? I don't know. There is a company like that. So you're trying to fit that in there, and if your profile wasn't a wooden block, was like a Jello, you can squeeze it in there. You're going to pay a premium for that. But if you can find the right spot, it's a smooth transaction, smooth fit, you get at least similar pricing to what you want, you have a great way to go. If that is you and you're looking for something like that, I've got a link in the description below where you can fill out a quote, talk to an agent, try to find the best fit for you. If you already have an agent, great. Go talk to them, take some of these discounts, work with them to try to find out what's the best way for you to get that premium down. Now, the second way is to change your coverage. And you've got to look at your current policy. Some people have these $500,000 houses and these really nice cars, but they're covered for $25,000 property damage. And if you don't understand that part, I'll link a video that goes over that more in depth. But understanding the coverages that you need to carry versus what you should carry. Now, every agent's going to quote you the higher limits, especially in states like Michigan, where the cost isn't high for that liability limits. There's a lot more cost elsewhere, but that piece is not expensive. That's where having that local or that independent agent can be beneficial, so they know the rules and the guidelines of your state, mainly because they know how to get the price back to where it should be. Knowing what your liability limits does matter. When you go from one company to another company, they look and count that as a rating factor. So if you have really good coverage and you stay there, they love that. They absolutely love that. But if you have good coverages and you raise it, they're a little bit more scared. So they're like, why are they going higher? So let's premium that a little bit more. Opposite is true if you go lower. Keep in mind, if you lower it, you're going to get a better deal, at least for the next year. But when it renews, they do it again. They recheck it. So where are these policies fluctuating? If that is the case and you need a quick discount, then yes, you could lower it a little bit. I personally would leave it the same, if not raise it to the right level that you should be. The third way is to bundle home and auto. I'm not going to go too far in depth with that. I think that's what everybody under the sun is saying. And I actually am starting to pull away from that answer because it just isn't possible half the time. Because the home and the auto are really good, but what I'm starting to notice with companies is their home is really good and their auto is really bad, or vice versa. That's not a good fit for the customer. It doesn't hurt you to have one car and one home in different locations and different policies. There's nothing wrong there. The only time it does matter is when you have companies, we'll just use Safeco as an example. They have a bundle package where if you have your home and auto together, then you have a one deductible. So if the house caught on fire, instead of paying the $1,000 for the house and $500 for the car, you just pay the $1,000 deductible. In that scenario, you're covered extra beyond that. On top of it, they give a massive discount for home and auto. So if that's the fit for you with that company, then you're going to have a really good deal by combining them. but Mark, I don't own a home. It doesn't make a difference. They recently banned separating home and renters separately. In every state I know, insurance companies are not allowed to rank whether you're a homeowner or a renter against you. That used to be a thing. If you're a renter, you get less of a discount. If you're a homeowner, you get a bigger discount. Now those discounts have been made even to where you're a renter or you're a homeowner, you get that 20% off. Think of it this way. If you pay $200 a month for car insurance and your renters is $40 a month, you save 20%. So let's say you save $40 on your car insurance. Technically, the renters cost you nothing. We can't say free because technically you pay for them separately and then you get it discounted on the back end, but you don't out-pocket any additional. It makes sense to have that extra coverage, especially if you are a renter, so that you get the better deal. That being said, once again, some companies have lost their minds and they think auto should be this price and home or renter should be this price and vice versa. So in occasion, it does make sense to break them apart. If you're that type of person that wants the risk on the renters and says forget it, then you may not even want to look at it. The fourth piece is to tailor the price to the cost of what you want to pay. And that's that name your price tool, right? That's the famous line. I hate that. Honestly, I feel like people should know what they should carry first. And then if you know that, which I'd say 95% of the people don't know that, and then they should start breaking off pieces. The packages that you can buy with insurance companies are usually bundled and cheaper together. But I would say 80% of the stuff in the package, most people don't need or use. In that case, you rip the package away. You look at, do I want renter's insurance? No. Do I want gap insurance? Nah. Do I want towing and road service? Nah, I can get through my cell phone. Do I want to have a savings deductible bank? Nah. You can rip all those pieces off of your policy if you currently have them. That's where you'll have to talk to your agent or look at your policy to see if you have any additional coverages that you just don't need to pay for. Number 6, I think we're on, is mileage. Mileage matters more now than it ever has because we're driving more and we have newer cars and there's higher risk. So the lower mileage you drive, the better. It always has been 10 to 12,000 was the normal, 10 to 15,000. And anything above 15,000, it didn't matter. You could drive 50,000. 90% of the companies don't care. If you drive between 8 and 10,000, now that matters. If you drive between 6 and 8,000, now that matters. Where it used to just be anything 5,000 or less is a good price. Now, if you drive anything less than 5, yes, that's still a better price. But I've seen a few times where if you drive less than 3,000, it actually gives you a little bit better of a price, not major, but it still gives you an extra deal because the risk is lower. But having the right mileage can play a factor. Once again, if you drive a ton, I wouldn't worry too much about it because they just cap it at that 15,000 and then they just don't care after that. Want a quick $5 savings? Go paperless. That's usually what it is, $3 to $5. It's really the cost for them to package it and print it and send you the documents. If you go paperless and you go DocuSign and all that fun stuff, then you usually save $5. Raising your deductibles is a huge thing right now because that is where a lot of companies are losing most of it's usually one of 3 things: bodily injury, your car comprehensive, and your car collision. There's not really the property damage or any of that stuff is as big of an issue, and that's really the main pieces of your insurance. But the bodily injury, if you're hurting someone, if you're in a risky area, then that can change. States like Michigan, 9 times out of 10, it doesn't do barely any change on the cost to lower that coverage. So yeah, you could save $20, but it's usually not going to be worth the change in coverage. States like Texas, massive difference. That's why a lot of people are carrying state minimums, is because the difference between state minimums and having a $500,000 liability coverage is hundreds of dollars, if not thousands. And when the rates keep creeping up, like Texas has been seeing, then you're noticing that is going to play a factor to maybe I do have to bump it down to the 100,000 or 300,000. So those are things to look at. The comprehensive is not as big of an impact in most states, but there are areas that it can be impactful. So if you're noticing the bill went way up, you can look at the line items and just see what the price changed. This one was that. And now we know where the price went. And so maybe I do have to do $1,000 deductible on comprehensive. Same thing for collision. And you know how to read. We're not reading between the lines here. So the collision is the most expensive on the car, and that matters the model of the car. I've got a video I'll link at the end that'll go over specifically how the car plays a factor. And the last one we're going to talk about is your insurance score, aka credit, as everybody calls it. They're different. I'm not going to go into that. I've got a video you can watch on that if you care about it. But the insurance/credit score matters a lot. When it changes, your risk changes. So what happens is if your insurance score goes up, Most to almost every company won't check that. They just don't care. It costs them money to rerun that. They usually need your permission as well, or at least have to notify you, because in most companies, they don't raise the rate because you have a worse score. Some credit-based insurance companies will, but I would say 9 out of 10 times they don't use that anymore. And what can benefit you is if your insurance score has gone up and got better, then doing that will actually get you a better price because they now see you in a better risk. I know it's unfair, everybody, the credit, like I got a video if you want to talk about it there. There are more things to that, but it's how it plays out in this scenario. So those are a lot of different ways that you can save on your current policy, some things that you should look at when you're renewing or looking at a new policy, some discounts that you may want to look at as well. If you want more specific actual line item discounts, I've got a video that's going to go over a lot of the discounts there. If you're like, I just don't understand what you were talking about for that liability part, I've got a car insurance 101 that'll go more in depth on that as well. I'm Mark with Think Insurance. I'll see you in the next one.